Most people think wealth changes your life the moment your bank account crosses a certain number. They imagine the day they finally become a millionaire will feel dramatic. They picture luxury cars, expensive vacations, private clubs, early retirement, and a life that suddenly looks completely different from everyone around them. They imagine freedom arriving all at once, like some giant reward after years of effort. But that's not how real wealth usually works. In reality, becoming financially secure is often much quieter, much slower, and much more powerful than people expect. Because the biggest change isn't what happens around you, it's what happens inside you. Your stress begins to fade. Your dependence on every paycheck starts shrinking. Financial emergencies stop feeling like disasters. And for the first time, your money begins doing something most people never experience. It starts working for you without requiring constant effort from you. That's the moment everything changes, not because you suddenly look rich, but because you stop feeling financially vulnerable. Most people spend their entire adult lives chasing income. They focus on promotions, raises, side hustles, and career moves. They ask the same questions over and over. How can I make more? How can I earn faster? How can I work harder? And in the beginning, those questions matter. Income matters. When you have little or nothing invested, your income is your entire financial engine. Your discipline matters. Your savings rate matters. Your sacrifices matter. Every extra dollar saved feels meaningful. Every smart financial decision feels important. But eventually, if you stay consistent long enough, something extraordinary begins to happen. Your investments start becoming the engine instead. And that's where life starts feeling different in ways most people never expect. Imagine spending years investing steadily. You skip unnecessary upgrades. You resist lifestyle inflation. You stay patient while others around you spend everything they earn. You avoid chasing trends. You keep buying productive assets. And then one year, your portfolio grows by an amount that once would have taken you an entire year to earn. Maybe it grows by $50,000. Maybe $80,000. Maybe $100,000 or more. Suddenly, you realize something deeply unsettling and incredibly exciting. Your investments made money while you slept. Your portfolio worked while you were at work, and the effort required from you was almost nothing. That realization changes the way people think forever. Because once your money begins producing meaningful progress without constant labor, you stop seeing work, time, and freedom the same way. You begin asking different questions. Why am I so afraid of losing this job? Why am I tolerating stress that's damaging my health? Why am I sacrificing years of my life for money that may eventually matter less than my time? Why am I treating my paycheck like my only source of security when I've started building another one? This is why two people with identical incomes can live completely different lives. One person earns a high salary but spends nearly all of it. Their life looks impressive. Luxury apartment, expensive car, high-end vacations, premium everything. But behind the scenes, they're trapped. Every paycheck is already spoken for. Every financial obligation adds pressure. If they lose their job, panic follows immediately. Meanwhile, someone else earns far less, but quietly built strong investments. They may look ordinary, but internally, they feel something far more valuable than luxury. They feel stability. That's one of the biggest misunderstandings about wealth. People think rich means spending power, but real wealth is often invisible. It looks like peace. It looks like flexibility. It looks like the ability to make decisions without fear. Someone with a modest lifestyle and strong investments often feels richer than someone earning 3 times more while drowning in obligations. Because freedom feels richer than appearances. The hardest part of building wealth is not reaching a specific number. It's surviving long enough emotionally to let compounding work. The first years are painfully slow. Your first $1,000 feels difficult. Your first $10,000 feels like progress, but not transformation. Your first $50,000 feels encouraging, but still small compared to your effort. Even $100,000 can feel underwhelming. You worked 4 years, stayed disciplined, made sacrifices, and yet your life still looks mostly the same. That's where people get discouraged. That's where many people quit. They stop investing. They get distracted. They chase shortcuts. They panic during market declines. They speculate on risky trends. They buy things to reward themselves prematurely. They interrupt the very process that would have changed their lives if they had simply stayed consistent. This happens constantly. People get close to the point where compounding starts becoming visible, then abandon the process because they're tired of waiting. But the people who keep going eventually enter an entirely different phase, a phase where their portfolio begins carrying more of the burden, a phase where growth starts feeling meaningful, a phase where patience starts producing rewards that seem almost unfair. That's when wealth begins feeling automatic, not because it was easy, but because the hardest manual phase is finally fading. The beginning feels unfair because every dollar requires effort. You work hard, save carefully, and your money barely seems to move. But over time, your assets begin helping. Then they begin contributing significantly. Then one day, they become one of your most productive financial tools. That shift changes your relationship with money forever. The first financial milestone any people notice is emergency stability. Maybe you save enough that unexpected expenses stop creating chaos. Your car breaks down, and instead of panic, you simply pay for the repair. A medical bill arrives, and instead of debt, you handle it. A sudden expense appears, and your life doesn't collapse. That level of stability alone changes your mental health dramatically. Financial stress is exhausting in ways many people don't fully understand until it disappears. It affects sleep, relationships, focus, and even physical health. So when someone builds enough savings to absorb shocks, life already improves significantly. Then comes another emotional milestone. Your investments begin growing enough that you actually notice. Maybe you check your account and realize it increased more in a month than you expected. Maybe a good market year adds more than your annual contributions. That feels strange. You start understanding compounding not just intellectually, but emotionally. Numbers that once felt impossible begin moving faster. As your investments grow, your behavior often changes. You stop obsessing over tiny savings tricks. You stop arguing over every small purchase. You stop trying to maximize every paycheck because you realize something more powerful is happening. Your assets are beginning to participate. That doesn't mean income stops mattering. It means income stops being your only source of progress. This is also where many people make dangerous mistakes. They finally start earning serious money and immediately upgrade their entire lifestyle. Bigger house, luxury vehicles, expensive schools, more subscriptions, better vacations, larger monthly obligations. It feels justified. They worked hard. They deserve it. And yet this is exactly where wealth often gets delayed for years or destroyed entirely. Lifestyle inflation quietly steals future freedom. Every recurring expense becomes a claim on your future income. Every unnecessary obligation makes you more dependent, not less. That's why many high-income earners remain financially trapped for decades. Their income looks impressive, but their savings remain weak. Their investments never gain enough momentum because every raise gets spent. Meanwhile, someone earning less but investing consistently reaches financial independence much faster, not because they were luckier, not because they were smarter, but because they understood something critical. Wealth is built by owning productive assets long enough for math to become extraordinary. Once someone builds serious investments, work starts feeling different. Before wealth, your job feels mandatory. You need the paycheck. You need the benefits. You need the employer. That dependency shapes your behavior. You tolerate situations you hate because uncertainty feels dangerous. Bad bosses, office politics, long commutes, exhausting schedules, stress that damages your health. Many people stay trapped in jobs they dislike for decades because they cannot afford instability. But when your investments become meaningful, something subtle changes. You may still work, you may still want income, but psychologically, the pressure begins fading. You start negotiating differently. You can reject bad opportunities. You can leave toxic environments. You can prioritize flexibility. You can take smarter risks. You stop making decisions purely from fear, and that changes everything. Fear creates expensive decisions. Fear makes people panic sell. Fear makes people overwork. Fear makes people tolerate situations that damage their lives. Fear makes people chase money they may not actually need. When financial fear weakens, life becomes more intentional. Another major shift happens with time. Wealthy people often stop asking how to earn more and start asking why they are spending time poorly. Why am I doing tasks I hate? Why am I solving problems I can outsource? Why am I wasting hours on things that don't matter? Why am I sacrificing irreplaceable time? This is why many financially secure people buy convenience rather than luxury. They simplify, they outsource, they remove friction, they protect time because they understand something most people don't yet fully appreciate. Time is the one asset that cannot compound backward. Investing behavior changes too. Early investors often panic during market declines. Every downturn feels terrifying. Every headline feels personal. But experienced wealth builders often react differently. They stay calm. They continue buying. Sometimes they buy more aggressively because they understand that temporary declines often create future opportunity. This patience compounds into enormous long-term advantages. Confidence changes too. It becomes quieter. Wealthy people often stop trying to impress others. Luxury brands feel less important. Flashy purchases feel less meaningful. Social status games become less interesting. Because once you understand real wealth, appearances lose much of their emotional power. You begin noticing how many people are financing lifestyles they cannot comfortably maintain. The illusion becomes obvious. Someone can look rich while feeling trapped. Another person can look ordinary while feeling free. That's why many people are surprised when they finally build wealth. They expected luxury. What they actually received was control. And control is far more valuable. Control over your time. Control over your schedule. Control over the environments you allow into your life. Control over whether money dictates your choices. That's what wealth really buys. But even after reaching significant milestones, mistakes remain possible. Some people become overconfident. They abandon the boring discipline that built their wealth. They start day trading, speculating, leveraging aggressively, chasing crypto hype, funding bad deals, trying to get rich faster when they were already succeeding. This destroys many people. Boring wealth is often durable. Exciting wealth often disappears. Others make a different mistake. They stop contributing too early. They assume compounding alone will do the rest. But continued investing still matters. Additional contributions accelerate growth dramatically. This is why later wealth milestones often arrive much faster than earlier ones. The machine is larger. Your habits are stronger. Your mistakes are usually smaller. Momentum becomes everything. Think of pushing a heavy object uphill. At first, every inch feels exhausting. But once it starts moving, keeping it moving becomes easier. Wealth works the same way. The early years feel brutal. The later years feel increasingly automatic. That's why protecting momentum becomes such a priority. Wealthy people often become obsessed with maintaining health, protecting habits, avoiding major mistakes, preserving relationships, and defending their peace, because rebuilding wealth is far harder than maintaining it. Eventually, another shift appears: legacy. Once people move beyond survival and personal security, they often start thinking beyond themselves, their children, their families, their communities, their ability to create opportunities for others. Money stops being purely personal. It becomes something that can outlive them. That psychological shift is powerful. Buying more things becomes less exciting. Creating freedom for others becomes more meaningful. And perhaps the most important truth is this: most people think they're chasing luxury. They think they want expensive cars, giant homes, and status. But usually, what they truly want is peace. They want freedom from pressure, freedom from fear, freedom from financial dependence. That's what wealth actually creates, not perfection. Life still happens. Markets crash, businesses fail, health problems arise, relationships get tested. But financially secure people often survive these challenges better because they built margin. Margin changes everything. It turns emergencies into inconveniences. It turns uncertainty into manageable risk. It turns fear into flexibility. And eventually, money stops feeling emotional. It stops being entertainment. It stops being validation. It becomes a tool for protection, a tool for opportunity, a tool for generosity, a tool for peace. And ironically, this mindset often makes people even wealthier. Because once money stops controlling your emotions, your decisions improve. You stop panic selling. You stop revenge spending. You stop chasing trends. You stop trying to prove things to strangers. Your portfolio simply keeps growing quietly. Then one day, you look back and realize something extraordinary. The first $10,000 felt impossible. The first $20,000 changed your stability. The first $100,000 changed your confidence. The first few $100,000 changed your momentum. And somewhere along the way, your money stopped feeling fragile. It started feeling automatic. That's when wealth becomes real. Not because you stop working, not because you buy flashy things, but because you finally wake up knowing you do not have to spend the rest of your life doing things you hate purely for survival. That may be the greatest luxury of all. Real wealth is quiet. It doesn't need attention. It doesn't need validation. It doesn't need applause. It simply gives you choices. And once your money begins working without constantly needing you, life begins changing in ways far more valuable than luxury ever could. That's when you stop chasing survival and start building the life you actually want.